Hello everyone, Dave Landry here from DaveLandry.com, and this is your Daily 5. Once again, I am super excited about stocks in general, and especially about the semiconductors. I'm also excited about Bitcoin and the rest of crypto for that matter. So let's dive right in with the TFM 10% system. The zones that I have in here are less than 5% away from the 50-week closing high, more than 5% away from the 50-week closing high, and more than 10% away from the 50-week closing high. The TFM 10% system was based on the premise that if a market is weak, it's likely to get even weaker, and 10% is a good round number for that. Now, one of my clients, a guy named Jeff, pointed out that once you get more than 5% away, the market tends to be in trouble, and it's a good time to exit. I did the back testing on that. A little bit more whipsaw, but it does have merit as far as an area where you might want to think about getting out of the market. Certainly want to make sure you have stops in place. Anyway, here are the rules. I've talked about this quite a bit, so I'm going to go through this pretty quickly. The sell signal is pretty simple. The market just has to close behind the 50-week moving average, and it also has to close 10% or more away from the 50-week closing high. And that's it. And the idea is just to get out the way and let everybody else fight it out. And the idea, the old hedge fund adage comes to mind. The idea is he who fights and runs away lives to fight another day. There's no guarantees in this business, as you probably know. But so far, knock on wood, this system would have kept you out of every bear market in history. Anyway, we had a sell signal. Then it was followed up by a buy signal. And that's what's known as a whipsaw, and whipsaws happen. And as I preach ad nauseum, quoting my good friend Greg Morris, whipsaws are frustrating, bear markets are devastating. You could survive frustration. The buy rules are a little bit more stringent to avoid getting whipsawed in and out too much. You have to be within 10% of the 50-week closing high, and you need 2 bars of Landry Light, meaning that the lows are greater than the moving average. And remember, these are weekly bars, so that's bar 1. And bar 2. We'll get into Landry Light in just 1 minute. So far, so good. As you can see, based on that last buy signal, even though we did get a whipsaw sell signal not that long ago. Now, let's take a look at the Qs. I did the back testing on the Qs, and they look decent, so I thought it'd be worth a shot. Just for S&Gs, I bought 100 shares on the last buy signal, and that was right there. Notice you have 2 bars of Landry Light, excuse me, above the 50-week moving average, and you're in the green zone, means that you're less than 5% away, but all that's required for the system is to be above the red zone, which means not greater than 10% or more away from the 50-week closing high. So 2 bars of Landry Light, just for S&Gs, I bought 100 shares, and I said, well, I'll just follow this and see what happens. And fortunately, the market took off, and based on the mark-to-market a little while ago, I have 120 points in this trade. So it's starting to add up a little bit. That's $12,000 worth of gains. So far, so good. The only thing that's a little scary, and keep in mind that although I've developed a lot of mechanical systems over the years, I am not a mechanical trader. I'm a discretionary trader. I do not follow systems mechanically. Everything I do is 100% discretionary, with the exception of I decide to follow the system. And the great thing about systems, by the way, is that they give you a kind of a quantitative way of looking at things. It's like, okay, the market is 10% or more away from its 50 weeks closing high. It's below that 50-week moving average. So we have a sell signal. I might want to get out the way. And that's a great thing about that. But anyway, what's kind of scary is, and again, I'm not a systems guy, but 25 points plus another 45 points or so, that's about 70 points. That's kind of scary. I'd hate to see that kind of drawdown, but you know the routine, one day at a time. All right, let's shift gears and take a look at Landry Light pullbacks, and also want to take a look at Landry Light and the Qs. Now, Landry Light, again, is just lows are greater than the moving average, and down here, you can see I have Landry Light plotted. This is in ACP. This is free. You just have to like this video, and you'll get the plugin for absolutely free. Click down here, and then click on my plugin. And I always say it's free for now. Maybe one day we'll charge for it, and I say that just in case you start charging for it. Anyway, you can see that nice uptrend in place here. And what's kind of cool is the Landry Light pullbacks. You look for a trend based on the Landry Light, and you look for pullbacks to the 30 EMA. You may be familiar with the setup I used to call kiss my goodbye, kiss the moving average goodbye. Same sort of premise, except I was using a 20 EMA. In more recent times, I use a 30 EMA. 20 EMA is fine. You might get a few more signals, a little bit more whipsaw with that signal. But anyway, nice little buy signal there. And then the trend resumes. You see you have the Landry light here. Notice that the Landry light goes back to 0 after about 30 bars or so. Now, keep in mind that this just counts the number of bars you have Landry light. So if you go all the way back here, you can see if you squint your eyes, this low is just above that moving average, and you have 1 bar of Landry light down here marked in the indicator. Now, I like to see indicators as illustrators because they don't indicate anything. If they indicated something, that'd be great. You'd make a lot of money following an indicator, so to speak. But what they do is they illustrate what's in the chart, and you can plainly see the market is in an uptrend. And I'll show you the example in just a minute where the momentum slowed, even though we still had Landry light. But you can see, again, we had another buy signal here based on a Landry light pullback. And this one obviously gapped higher the next day. But so far, so good based on that signal, too, that follow-up signal. All right, let's talk about Landry light and crypto. And again, down here, you can see we have nice Landry light, about 70 or 80 days worth of Landry light. And you can see the chart above was at a really nice uptrend. Now, one thing to watch, even though green is good, you also want to look at the chart and see that even though you had Landry light down here, notice that the momentum was slowing. So always pay attention to the net price change. So again, the market in this case lost a little steam. Pay attention to that net price change, regardless of what the Landry light is saying. And then you can see here, we did have what looked like could be the beginnings of a downtrend, but we only had about 9 bars or 10 bars of downside Landry light, and then the market began to rally from there. In fact, we only had about 5 bars of downside Landry light before the market began to rally. So be cautious when that happens, especially after a market makes a big gradual rollover like it did. But then wait for some sort of follow-through before taking action. In this case, you can see we had, again, about 10 bars of Landry light total. But notice that even though that Landry light to the downside was going lower and lower, more and more bars, the count was increasing. Bitcoin, in this case, was actually beginning to rally and close that gap of that moving average. Anyway, you can see that it consolidated a little bit. And down here, it's flipping back and forth from green to red. You can see it's upside Landry light and no downside Landry light, but 0 when it intersects. And then it began to take off again. And so far, so good. It's been a really nice uptrend. Now, I want to talk about big picture news reversals. And I think it was, geez, I hate to even add it all up. I think it was 13 years ago. It was 2011. I was speaking at a traders conference in Dallas. And right around that time, unfortunately, Mr. Jobs wasn't doing that well. And it was kind of a fait accompli. He probably wasn't going to make it. And somebody raised their hand, and even though I'm a technician, they wanted to know what I thought about what that would do to Apple. And I said, well, I don't know, but as someone who looks at a lot of charts, I can tell you that see what the reaction is when the unfortunate event occurs in the stock. And if the stock goes on subsequently to that and takes out the high of that day, then that would actually be a buy. It would mean that the market has absorbed that news and no longer is worried about that. And this concept comes from Larry Connors years ago in the mid-90s or early 90s. I worked with Larry Connors, and I guess mid-90s too. We started one of the first websites out there. It was us and MarketWatch, and there was one other, Street.com, I think, were the only websites out there for information on stock trading. Now, the spot ETF was approved here, or educational trading, I should say. Spot ETF was approved here, and the market immediately sold off. And that's a bit of a, I guess, buy on the rumor be back here, selling the news type of situation. And all these people came out and predicted all this doom and gloom, predict early and often, I suppose. And it's the end of the world for Bitcoin. The crypto's done. It's gone. You know, probably the guy who screams on TV who I don't pay attention to. I'm sure he had a lot to say about that. But anyway, what's interesting is if you broadcast that high across, you could see the buy on the big picture news reversal would be on this day here. Now, I'm not suggesting you run out and trade this pattern in and of itself. I would trade some technical pattern like the Landry pullbacks or whatever you normally trade. However, it is a good little tool to have in your toolbox, these big picture news reversals. And that just kind of gives you a little bullish fodder, if you're bullish, of course. Okay, let's shift gears and get back to stocks and talk about the SMH, the semiconductors. Now, if you've been following me for a while, you'll know that I'm a huge fan of when the semiconductors confirm what's happening in the overall market. In fact, I think that would be a good study, and maybe in the next Your Daily 5, I'll delve into that a little bit more deeply. But the bottom line is, it's a good thing when semis confirm what's happening with the overall market. This is sort of akin to the Dow theory, where the transports should be doing well when the overall market is doing well. Well, you can kind of think of the semiconductors as the information highway for that. So it's kind of a little bit of an analogous to that in more modern times, although the transports seem to be pretty important too nowadays. If you've got any boxes on your front porch, you probably know what I'm talking about with all the stuff being ordered online. But anyway, take a look at the semiconductors. As you can see, tons and tons of Landry light in here. Nice little pullback to the moving average way back earlier this year. And since then, we've had lots and lots of Landry light. Also, if you just draw your arrows, you can see that the trend remains up. So far, so good on the trend. And by the way, one thing I want to point out, whenever we have a little bit of a spill in the market, all these bears come out the woodwork. Well, a sell-off within reason, a correction, a pullback, so to speak, is actually very healthy for the market. And one thing to think about is without pullbacks and corrections, there wouldn't be a market. Everybody would agree on price, and then that would be it. So something to kind of think about there. Although it's painful, it's good for the market when the market has these orderly, and orderly being the key word in that, pullbacks every now and then. So semiconductors, yeah, we're going to see some pullbacks here and there. We're going to see a lot of people, a lot of chicken littles come out and say it's the end of the world. But for now, it sure looks pretty good. Well, that's it for this week. I want to thank everybody for watching. I appreciate you taking time out of your busy schedules to watch this. If you need to reach me, dailylandry.com/contact. I do a weekly webinar, and those are still live, dailylandry.com/webinar. And here's the rest of my contact information. Feel free to hit me up. If you have any questions, I'll be happy to answer them. I do answer all comments, so feel free to leave a comment below. If you have any questions, again, hit me up. Everybody have a great day, and may the trend be with you.